We all know about taxes. Yeah, nobody likes them, but they're everywhere. Governments use taxes to pay for roads, schools, hospitals, basically everything a country needs to function. There are two main types of taxes, direct taxes and indirect taxes. This is how they work. Direct taxes are paid directly by individuals or businesses to the government. Think income tax or property tax. You earn money, you pay tax. You own a property, you pay tax. Simple, right? Indirect taxes, on the other hand, are a bit sneakier. They're included in the price of goods and services we buy. So, when you buy a samosa, you're paying more than just the price of the samosa. You're also paying a goods and services tax, GST, on that samosa. Understanding the difference between direct and indirect taxes is crucial for understanding how our economy works. Now let's dive a little deeper into each type. Direct taxes are like that friend who always asks for money up front. You know exactly how much you owe and when you owe it. Income tax, the most common direct tax, is calculated based on your earnings. The more you earn, the more you pay. Seems fair, no? One of the main advantages of direct taxes is their progressivity. This means that richer people pay a higher percentage of their income as tax compared to poorer people. This helps in reducing income inequality. However, direct taxes can also be a discouragement for high earners. If they feel like they're being taxed too much, they might be less motivated to work harder and earn more. This is something governments need to be careful about. Unlike direct taxes, you don't pay indirect taxes directly to the government. Remember the GST on that samosa? That's an indirect tax. It's collected by the seller and then passed on to the government. The biggest advantage of indirect taxes is that they're very easy to collect. Every time you buy something, you're paying tax without even realizing it. This makes it a reliable source of revenue for the government. But indirect taxes can also be unfair to lower income households. Think about it. A rich person and a poor person buying the same samosa will pay the same amount of GST. This means the tax burden falls disproportionately on the poor, as they spend a larger portion of their income on essential goods and services. So which type of tax is better? Well, it's not that simple. Both direct and indirect taxes have their pros and cons. The key is to find the right balance between the two. A good tax system should be fair, efficient, and promote economic growth. Governments need to carefully consider the impact of both types of taxes when making decisions. Too much reliance on direct taxes can discourage investment and economic growth. On the other hand, too much reliance on indirect taxes can burden the poor and exacerbate income inequality. It's all about finding that sweet spot. In conclusion, understanding the difference between direct and indirect taxes is crucial for every citizen. It allows us to engage in informed discussions about tax policies and hold our governments accountable for creating a fair and equitable society. After all, it's our money.